If you're looking to get 80 plus in your FR exam, then don't miss out on this video. I'm Megha Bansali, ACCA and an Indian Qualified Chartered Accountant. In this series of solving FR past paper, we are doing all past papers of FR, discussing exam strategy, time management and all of that. In case you have missed out our previous videos, then please go back to our playlist and watch them. And this is our last question of this paper, where we are going to be solving single entity question. So if you are going to be watching all the videos, following all the strategies, you will really get good tips and great effective result in your FR examination. So guys, without wasting a lot of time, let's jump on to our FR practice question. The question paper that I am solving is practice paper 1 from the CB platform. And guys, please do not forget to subscribe to my channel, like the video and share it with more of your FR friends. As discussed earlier also, the key in your examination should be to read the requirement first and then solve your question. Now for single entity question, there are multiple challenges that you will be facing. So we will be discussing all of those as and when we are going to be solving the paper. But first guys, most important is you prepare the structure. Okay, so prepare what has been asked and then start solving. So it makes it very clear in the examination. Now the first question is, prepare a schedule of adjustments required to the draft profit before interest and tax in the trial balance to give the profit or loss of Triage Co for the year ended 31st March 2016 as a result of information in notes 1 to 4. Now I know I need to prepare a schedule of draft P&L. So simply in your solution start preparing a schedule. Very important. It will help you save a lot of time, and when it is a balance sheet question, you will never go wrong in terms of your balance sheet not tallying if you follow this hack. So first I am putting this schedule of P&L. So what is the draft profit given to me here in the question? I have just plotted that figure. Then the next one, prepare the statement of financial position of Triage Co as at 31st March 2016. Now for this, again prepare the structure of your balance sheet and you can start plotting the figures as given in the question. So that's what I have done here. So I have simply taken my balance sheet as it is and I have plotted all the figures. So equity share capital, I have put it in equity share capital and all of it. And guys, the hack here is put a check here. Okay, your balance sheet, your assets and your liabilities should always tally. Now I am getting a difference of 30,000 because of profit. I have not considered profit for the year. So that's the difference I am getting. But otherwise your balance sheet should always be 0. Please make sure this from the first itself. So the minute you pass any adjustment, again go back and check, okay, balance sheet is 0, so I am sure my adjustment is correct. So this will give you a lot of confidence in the exam and it will immediately make you feel that yes, answer is right, answer is right. And if you are going wrong anywhere, you will know right then and there that yes, something is wrong. So please follow this hack. Then lastly, the issue of convertible loan notes can potentially dilute the basic earning per share EPS. Calculate the diluted EPS for Triage Co for the year ended 31st March 2016. There is no need to calculate the basic EPS. Note, a statement of changes in equity and notes to the statement of financial positions are not required. Allocation of mark 5, 12 and 3. So here basically I know it's only for 3 marks. So simple, put the formula, do the calculation. That's it. Now let's start. Again, now you would have already put all these figures into your, balance sheet. So we'll quickly start with the adjustment because all these figures would have already come here. Your share capital, retained earnings, profit, loan, lease property, plant and equipment. Now all these I have put net of depreciation in my asset schedule. So I have taken the original cost minus depreciation and this is what I have put. I hope you're understanding and you're following so far and I'm trying to make it as simple as possible. So Please follow, and in case you guys are getting stuck, not able to understand anything, you can always drop in a comment below. I will be very happy to help each one of you. Now starting with the first note, Triage Co. issued $4,100 6% convertible loan note on 1st April 2015. So our year end is 31st March 2016. So 1 year ago is when they have issued the loan note. Interest is paid annually in arrears on 31st March each year. The loan can be converted to equity shares on the basis of 20 shares for each 100 loan note on 31st March 2018 or redeemed at par for cash on the same date. An equivalent loan without the conversion right would have required an interest rate of 8%. The present value of $1 receivable at the end of each year based on discount rates of 6 and 8% are given below. Now, whenever there is a convertible loan option, there will be a component of equity and liability both put together. So, first we need to bifurcate the component of equity and liability. Whenever there is a convertible loan note, we have both equity as well as liability component involved. So, first we need to bifurcate it. Always remember, liability is very simple. Liability is present value of future cash outflow. That's for any liability for that matter. I know you would have studied that at the time of studying how to account for liability. So use your basic concepts and solve the question. Even if you have not studied financial instrument, you will still be able to understand this point. So we will first bifurcate how much is liability, how much is equity, and then we will put the equity portion into equity part, liability we will put on the liability part. So simply decode all your notes very conceptually, break them down as much as possible and solve each part one by one. And guys, the key, the hack here is past journal entries. I don't know why students don't do it nowadays. The kind of answers I get from students in classes, I don't know my basics, I have forgotten debit and credit, what is accounting rule. Guys, don't say all that. If you don't know your basics of accountancy, then this is not the course for you. Okay, if you're finding basics very difficult, please go back, pick up your 12th standard books, 11th standard books and read it. Very important to have conceptual clarity, very important to know to pass your journal entries. If you are passing journal entries for each of your adjustments, going and affecting the debit and the credit correctly, then checking is my balance sheet total, asset minus liability 0, perfect, that's it. That's all you need to solve your single entity question. Okay, now moving on. So I will say working note, always please number your working notes so that it's easy for anyone to evaluate your paper. So we will say split of equity and liability in loan note. Okay, so simply I will say year, I will say cash flow, then I will say discounting factor, and then I will say present value of this. So in my year 1, 2 and okay, because 3 years are given, we will take it for 3 years. We will assume that this is going to be repaid in 3 years. So 3 years, here we will come to year 3 to year 3. Now cash flow, in my first year I will only pay interest. Always remember, here we are taking cash outflow. What will be actual cash payment that I am going to do? I am only going to pay 6% interest. So 4 lakhs into 100 into 6%. But remember, all these figures are in dollar thousands. So we will put all these also in thousands. Also in your answer, please somewhere mention that all the figures are in dollar and thousands. So it's easy for you to put it, and you don't have to write it again and again. So this I'll just divide this by thousands, or from 400 I'll minus 3 zeros. Now when I'm taking discounting factor, what is discounting factor? The account of inflation. Inflation will always be based on the market interest rate. So I have to take 8% when I'm calculating my discounting factor. Now discounting factor directly given to me 0.93, 0.86, 0.79. Cash flow for the second year will technically remain the same, so you can do equal. And guys, please put in formulas in your Excel so that someone knows from where you are picking the figure. The examiner will exactly know how the figure has come. Plus what will happen is, let's say I have a typo error here. Instead of 400, I have keyed in 600. Okay, and if I have linked this somewhere, the minute I change this here, all the linkings will also get changed. I don't have to go back and see where all this is linked. So please link your answers, please put all the formulas as and when required. I will be paying interest plus my principal at the last year. This will be my cash outflow. So this into this will give me my present value. Simply Control C, Control V, your formula will get copied. Then you can say total liability. Total liability portion will be addition of all this, which is 37,792. Then you can say minus face value. Okay, face value is equal to 4 lakhs into 100. So this will give us our equity portion. So equity portion will be equal to this minus this. Sorry, this minus this. So I know 2208 should go into my equity and my liability should be accounted at 37790. So simply now go and adjust this to my balance sheet. So here under equity, other component of equity, please link all the figures 2208. Now I know my liability, the reason the liability is 4,40,000 sorry, and here they have interest payment. So I have minus this from the face value. So here I have put this as 2400. But for this simply we can calculate our liability table. Liability, you can say liability, or you can put your closing liability is equal to opening liability plus interest payable minus interest paid. Okay. So my opening liability is equal to this 37790. Interest payable will be this into 8%. Always also the finance cost that I am going to put into my P&L will be on market rate. Interest that I have paid is 2400. So my liability should be this plus this minus this. So you can put this in. So you can put this in 0.00 format. So 38415 should be my liability. So what I will do is simply over here I will link this to this figure. Okay. But I have to also account for finance cost. So I will say minus finance cost. So total finance cost is going to go from my P&L. So which will be 3032. So give immediate effect of all your adjustments. So you can see other component of equity I have given, liability we have reinstated, interest expense also we have accounted. So this is completed and you don't have to bother about this adjustment going forward. Moving on to working note 2. And also in the exam you can give a reference here. You can just probably say working note 1. You can say working note 1 and you can say working note 1. So the examiner will know from where these figures have come from. Moving on to the second adjustment. The directors decided to revalue the leased property at 66.3 million on 1st October 2015. Triage Co does not make an annual transfer from revaluation surplus to retained earnings to reflect the realization of retained gain. So very good, easy for us, no transfer, no headache, simply do revaluation calculation and close the adjustment. However, the revaluation will give rise to deferred tax liability at company's rate of 20%. So, some part of this has to get accounted in my deferred tax portion. The lease liability is depreciated on straight line basis and plant and equipment at 15% per annum using the reducing balance method. No depreciation has yet been charged on any non-current asset for the current year ended 31st March 2016. Simple revaluation adjustment, calculate depreciation, close the adjustment. There is nothing complicated here. Now, first we will do lease property. Original cost 75,000 and depreciation already charged 15,000. Now, here we do not know how much life has happened. So, simply if you do 75,000 divided by 25, you will get 3,000 as annual depreciation and 15,000 already charged. So, that means 5 years life already lapsed. So, simply we will say lease property. Now, today in my book it is at 75,000 minus 15,000, it is at 60,000. Now, this is on the opening balance, okay, opening lease property. Then this revaluation takes place on 1st October. So, we know whenever I have to do a revaluation, I need to compare carrying amount with the fair value. However, the carrying amount is cost minus depreciation. So, 6 months depreciation you have to take. This is the mistake most of the students make. They forget to take 6 months depreciation. I hope you are understanding why we have to take the depreciation, right? Yes? If not, please drop in a comment below. Okay? Minus 6 months depreciation, okay, which will be equal to, so I know 75,000 is my cost divided by 25 years is the life into 6 by 12. So, carrying amount as on 1st October 2015 is this. Then fair value is given to me as 66.3. So, then I get my revaluation gain, which is this minus this, and further I need to calculate 6 months depreciation. So, we know 20 years have lapsed, 5 years have lapsed, 20 years remaining. So, fair value divided by 20 into 6 by 12 is what you can do. But here again not remaining 20 years, 19.5 years are left, because we know from the start of the year there are 20 years left, but 6 months have already lapsed. So, this is my total depreciation. Now, quickly we will go and adjust our balance sheet for this. Revaluation gain I need to account in my OCI. So, I have put my revaluation surplus here, which is 7,800. So, simply you can say working note 2. Then I need to account for my depreciation. So, under my adjustment I will say depreciation on property, working note 2, which is equal to this plus this, okay. So, that is my calculation, okay. So, depreciation I have adjusted, I have adjusted my revaluation also. I need to reinstate my property at, okay, closing balance. Closing balance will be equal to revalued figure minus depreciation. So, I am reinstating my lease property here. This is coming from my working note 2. Now, they say, however, the revaluation will give rise to deferred tax liability at the company's rate of 20%. So, basically entire gain will not go into revaluation surplus, only 80% gain will go here and 20% will go in your deferred tax portion. So, simply do this into 80% and say equal to this plus my revaluation gain of 7,000 into 20%. So I have also affected my deferred tax. So you can say working note 2. Then we need to calculate depreciation on property, plant and equipment at 15%. This is very simple. Whatever balance of PP is available, 4,400 into 15% is what you can do. So you can directly calculate this. You don't have to create a working note. You can just say depreciation on plant and equipment PPE is equal to 7,200 minus 28,100 into 15%. So that's my depreciation. Just do a minus. Okay. So here I'll just say this minus this value 6,600. So my revised PP is also available. So this was a simple adjustment which I think comes in most of the questions. So you guys will be aware of this. Now moving on to our third adjustment. In September 2015, the directors of Triage Co. discovered a fraud in total of $7 lakh which had been included as receivable in the above trial balance has been stolen by an employee. So there has been some fraud that the employee has done. $4,50,000 of this relate to the year ended 31st March 2015 and the rest to current year. The directors are hopeful that 50% of the loss can be recovered from the insurance company. Now this last point is simply given to confuse you. It's a contingent asset. We know whenever there is a future probability of any inflow, we don't account for it until unless I'm 100% sure. Because of which concept, guys? Prudence. Yes. So because of prudence, we are not going to be accounting this. Only have to account for loss. But here the just the presentation will slightly change because you know 4,50,000 is prior period. So this will have to be minus from the retained earnings and only the balance of our loss, which is 2,50,000, will be adjusted in the current year. So simply here you can just put prior period loss, current year loss. Prior period loss is 4,50,000, current years is 700 minus 450, 2.5. So prior period, I am minusing it from my retained earnings minus this. Current year's loss, I will put it here, okay, minus loss on fraud, working note 3. Yes, and so I have given only one effect of it, and my trial balance will have, my trade receivables will have to be reduced by 700. Always give double effect of any journal entry, so your balance sheet is always going to tally. So is equal to this minus 700. Okay. Also what you can do here is you can do a total here. So you can here make sure that this profit and this difference is always tallying. See, 16,926, 16,926. So that means so far our adjustments are going right. Every debit and every credit is equal effect. This is what you can keep checking in between your exam. So you know, okay, at least till my third adjustment something, everything is correct. If something is going wrong, then that was my fourth adjustment. Now, a provision of 2.1 million is required for current income tax on the profit for the year end 31st March 2016. Simply I know I need a profit of 2.7 million. How much profit is there? So current tax, there is a 700 debit. Now what is this? The balance on current tax in the trial balance is the under or over provisioning tax for the previous year. So I need to have a current tax provision of 2.7, but I have a minus 700. So first I need to make this 0 and then I further create a provision. So you will say here basically income tax expense and your tax payable account. Okay, so this will be debited and then credit tax payable account. So I need to create a provision of 2.7 million, and because I have a debit of 700, I am reversing this. So debit balance will get reversed if I credit this. Same thing again, I need to pass 700. So my current tax will be equal to this once again. So it is minus 700 here, so equal to this plus these two, plus this plus this. So this is my working note 4. Okay, and then the same effect needs to come here. So minus tax expense, working note 4, which is equal to minus of this plus this. Okay, please link it to the right figures so that if there is anything that you need to correct later, you will not struggle later on. Then so just last part left of deferred tax, let's quickly solve this. In addition to temporary difference relating to the information in note 2 at 31st March 2016, the carrying amount of Triage Co's net assets are 12 million more than tax base. So I know deferred tax is basically what? Difference in my carrying amount as per books and tax base. Already they have calculated and given to us 12 million, and there is also a deferred tax difference on account of revaluation, which we have done in our working note 2. So simply go back and link this to your working note 2, where we have a revaluation difference of 7,800. So this will give you your deferred tax liability, closing deferred tax liability, okay, which will be this plus this into 20%. So my deferred tax liability has to be 3960. Now what is there here is 4760. The reason why we can take this figure is because some adjustments we have already done. So I am taking this same figure which is on top, okay, and not the opening balance. I will say adjusted deferred tax liability is equal to how much? 4760. Or you could do the adjustment here also, 3200 plus 20% of your revaluation gain. Okay, so this is what it is. So reversal of DTL is this minus this. So 800 of DTL we need to reverse. So simply you can put DTL here from working note 4. You can put it here. Okay, closing we need to do, and then we will add here reversal. Liability is reducing, so we will have to add back our profit, reversal of DTL, which is 800. This is your working note 4. Now this profit is what will come here. Okay, so in my retained earnings, I will say this plus my profit figure, which is 14,326. So you will see my balance sheet is completely matching. All your debit is equal to your credit. So this makes your solving in the exam easy, plus you can keep rechecking yourself multiple times. So it makes it very simple. Now one simple part of the question which is left, we'll quickly do that, which is your diluted EPS calculation. So part C, okay, diluted EPS we know is equal to profit available for equity shareholders, profit plus saving in interest, because if I am going to be converting my bonds into equity, so this interest is what I will save, then equity shares plus potential shares. Now what is my profit? I know from top my profit is 14,326. Saving in interest, now what is my interest expense for the year? Go back to your working note 1. My interest payable is so much, but 20% I am saving on tax, so only 80% would be my saving in interest. Potential equity shares, existing equity shares I will take first, which is given to me as here 50,000 are my equity shares. Now potential equity shares that will come is $4 lakh shares I will issue for $100. The loan note can be converted to equity shares on the basis of 20 shares for every $100 issued. So 4 lakh, so how I will calculate, 4 lakh shares into 100 divided by 20. This is my number of shares. Now because we are doing the workings in thousands, removing 3 zeros. So this will give me my numerator and this will give me my denominator, and then my diluted EPS will come to 0.33, 0.32. So you can also just put the formula, put in the figures and do it, solve it like this. That will fetch you marks in the exam. So guys, this is how you can solve your single entity question, wherein you keep in mind each of your adjustments, keep in mind your debit and credit, and keep the check always on so that you are never missing out anything in the examination. I hope you are liking my FR series. In case you require any kind of assistance, are looking for any kind of help for your ACCA examination, you can always reach out to me, and you can also drop in a comment below, so I'll be very happy to help you. And guys, please don't forget to subscribe to my channel and share it with more of your friends. I'll be back with more such content. Till then, take care. See you all.